What's up, guys? Welcome to Casually Opinionated, where we talk about everything you want to know and everything that matters in pop culture and current events. And today we're talking about the GameStop stock controversy. What is it exactly? Was it a good idea or a bad idea? And what the future of stock trading looks like for us common folk. Let's get into it. I think a good place to start with this one is with GameStop itself. And for those who don't know, GameStop is a video game and video game merchandise retailer that's been on the decline for a couple of years now. I'm actually surprised that the pandemic wasn't the final nail in the coffin for these guys. GameStop has closed over 783 stores over the past 2 years, and they were continually losing money. GameStop was great once upon a time. I used to go there all the time to the little demo stations on the side where you could try out all the new games. But one time I tried to sell my PSP and they only wanted to give me $40, and I was like, that's it, I'm done. This is a ripoff. I was like, anyway, GameStop's decline led to people predicting that they'd have another horrible year financially, which led to investors short selling GameStop stocks. Okay, I'm going to try and break this one down. Short selling is essentially when an investor borrows shares from a broker, then he immediately sells those shares with the hopes that that stock would drop so that they can buy that share back at the lower price, give that share back to the person that they borrowed it from, and keep the difference. This is different from what I and maybe you guys know or think of when you think of investing, which is investing in a stock, letting that stock grow in value, then selling it later to make a profit. It's worth noting that there are other companies that are in the same exact boat that GameStop is in. Some of these companies are AMC Theaters, BlackBerry, Macy's, and I believe Bed Bath & Beyond and American Airlines. These are some companies that are just prime rib for these hedge fund guys. It seems like easy money to them, and they really don't care about like the employees or the company itself. I mean, these guys had billions of dollars invested into a company where the only way they would make money is if the company failed. Think about that for a second. This led to a group of Redditors, a part of a subreddit called Wall Street Bets, to buy a bunch of shares of these stocks, driving the prices all the way up. And the hedge fund guys had to buy the stocks back at way more than they paid for it, losing about $20 billion along the way. CNN Business reports that GameStop stock shot up 1,700% last week, making stock $200 a share from the $4 a share that it was just last year. As far as AMC stock goes, they had a 535% gain in its share price and was able to pay off all of its losses from last year. Now, this is a true story of David versus Goliath, with David being the Redditor / small-time investors and the hedge fund guys, of course, being Goliath. And David just got in a good shot on Goliath. He's not down, but he's definitely stunned. One of the ways the Redditors did this was through stock trading apps like Robinhood, who recently announced that they would only allow limited buys of stocks such as AMC and GameStop. Unfortunately, it looks like GameStop stock has already begun to plummet, with the stock going down over half of what it was priced just a few days ago. So why'd they even do this? Some people are saying that it was for the obvious reason, to make money. Some people are saying that it was for nostalgia, and what I found the most was people saying that it was a way to let these hedge funds know that they can't just do whatever they want and, manipulate the stock market to kind of be their own game, and that, this, just like many things, is going to be in control of the people now. Bringing up GameStop stock prices is all well and good, but GameStop is still trash. There's nothing that they have that's gonna justify their new evaluation on the stock market. I'm a fan of apps like Robinhood offering everyday people the chance to try their hand at the stock market, but I'll be the first to tell you that a lot of people on that app do not know what they're doing. It's like, would you let someone perform surgery on you because they thought they knew how to do it from watching Grey's Anatomy? No, you would not. Now, I'm not saying I'm not a fan of giving the man a swift kick in the ass, but we should really let these stocks reflect the actual value of their companies. I mean, that's what the stock market is there for. My point is, there's learning curves to these things. We can also be seeing a clash of kind of like an old school mentality or an old way of doing things with a more modern mindset. It's kind of been the theme of last year coming into this year, so it's only right. And GameStop ain't shit. I can download all my games directly into my console, so why the fuck am I going to GameStop? And as far as AMC goes,
I didn't fucking touch it.
So what do you guys think about this whole situation? Are you on the side of the Redditors? Do you guys use apps like Robinhood? What's some of your experience with these things? Comment below, let me know. Be sure to subscribe and hit the notification bell. Follow me on Instagram at Casually Opinionated. And if you want to follow my personal account, it's at Lito's Way. And I'm back on Twitter after 5 years. Follow me at Lito's Life. And let me know what's new there. It's been a while. It's a new world. Thanks for watching, guys. I'll see you on the next one.